Alibaba makes second biggest ever quarterly share repurchase worth $4.8 billion, the biggest share repurchase by a Chinese tech company in the past year. Hi Team Value, JJ here, welcome back. Well, more Alibaba stock news, repurchasing upgrades this time. Now, as we can see here, Alibaba's published a voluntary share repurchase update, and they say in the update, during the quarter ended 31st of March, we repurchased a total of 524 million ordinary shares for a total of 4.8 billion, which is quite a lot from what they have been doing. We'll see that in a second. These repurchases were made in both the US and Hong Kong markets under our share repurchase program. For the fiscal year ended March 31st, 2024, we repurchased a total of $12.5 billion. So significant buybacks they're starting to do here. They continue. As of March 31st, 2024, we had a net decrease of 522 million ordinary shares compared to December 31st, 2023. So their share count going down, which is what happens when you repurchase shares, or a 2.6% net reduction in our outstanding shares after accounting for shares issued for the full fiscal year ended March 31st, 2024. So share count definitely going down. Our share repurchase program resulted in a net decrease of 5.1% net reduction in our outstanding shares after accounting for shares issued. Now, this is a useful table to see what they've been doing over time. Historical repurchases and net reduction in total shares outstanding. And here we can see fiscal year ended March 31st, 2024. 3 months ended, and we can see March 31st, 4.8 there. Before that, it was 2.9. Before that, 1.7. For that, 3.1. So increasing buybacks here, definitely. It's quite a big ramp up of buybacks. A lot of investors have been wanting them to do this because the share price has gone down over 70% and really in a channel not going anywhere. So buying back when the share price is as low really as it's been for a very long time. Why wouldn't they buy back when they've got a lot of cash? They do seem to be doing that. They've had this IPO plan for the different business units, which are put on hold or maybe even postponed indefinitely because the macro environment in Hong Kong and even in the US, there aren't many IPOs, that's for sure. But, you know, it's a terrible macro environment. They wouldn't get full value. They're trying to increase value for shareholders, and this is a way of doing it. If you don't know about share buybacks, it's decreasing share count, as we've seen there, as they outlined. The shares that they have left should theoretically be worth more over time. And we can see the share repurchase amount here in ADSs, and we can see 65 in the latest quarter, and it was 37, 19, 36. So definitely ramping up there, making a statement here about how much they've been buying back. And the outstanding share count here, we can see it's 2434 here, and it's been going down, which is what you want to see when they're buying back. It means they're not issuing more shares than they are repurchasing, which is good to see. And net reduction percentage in total shares outstanding, 5.1%. for the 3 months ended 31st of March. And the 31st of March 2023, it was 3.9. So continuously buying back, and it does make you wonder, would Charlie of Munger have actually sold if he saw that they were buying back over time? In the Daily Journal annual meeting, they may say that he left instructions to do that. We don't know. It's going to be interesting to see if that's the case, as I said yesterday in that video. Now, if you haven't seen yesterday's video already, this is Charlie Munger's portfolio as of this quarter. They report early after the quarter, and the Daily Journal Corp Investments was what he was managing, and they have sold 35% there of Alibaba. They didn't wait much time after he died to do that, and I wonder if he left instructions to do that or whether they're just doing it because they wanted to do it. Now, before we go on to see what else is being said about the repurchases, let's just check here on GuruFocus, and we can see here that over the last month, the share price is down. The repurchase news here hasn't kicked the share price up at all, and year to date, we can see that it's down 7.48%. So over time, when a company repurchases more and more shares, eating their own shares, That should send the share price up over time. We'll have to see if that happens with Alibaba. They have been buying back for quite a while, and these increased share purchases hasn't had an immediate market reaction, but will it over the next quarter or two? If they keep doing that, we'll have to see what happens. Now, if you're getting value out of this Alibaba stock video so far, I'd really appreciate it if you manage to hit that like button wherever you see one on YouTube or elsewhere, because it really does help the algorithm to spread it to more people. Thanks. This is news from Alizilla, which is associated with Alibaba, and they say that earlier this year, the group said it would begin voluntary updates on its share repurchase program to increase transparency for investors. Alibaba's total shareholder yield in the form of dividends and share repurchases led its large cap peers by reaching 6.5% during the 2023 calendar year. The ramped up repurchasing program is part of a broader drive of returning value to shareholders. Important there, and that's why they said they were going to do the IPOs as well, which have been postponed indefinitely, as outlined by Alibaba Group Chairman Tsai last year. Our capital management activities are dynamic and remain a top priority for our management team and our board of directors, he noted during the earnings call in November, which I covered. I've been covering each earnings call. I will cover the upcoming one to see what they say there. Under the current program, the repurchase program, effective through the end of March 2027, the group has $31.9 billion worth available to fuel repurchase activity. So that's significant. Be interesting to see if they carry that through, if they step that up even, because that's a huge amount of cash, and they do have a lot of cash that they've allocated for repurchases there. That's a significant amount of the market cap, the current market cap that they're planning to buy back there. And just quickly, this is how the news was reported on Reuters. Alibaba makes second biggest ever quarterly share repurchase worth $4.8 billion. Reuters adds the company has raised its share buyback plan by another $25 billion in a bid to appease investors concerned over its growth prospects as it faces market rivals such as PDD. And Jack Ma congratulated PDD in that memo. I did a video about that memo that he put out. That he came back onto the scene, he did an internal memo which got leaked, and he congratulated PDD and said that Alibaba has to pull up its socks. Not in those words, but it said it can be competitive again, which begs the question, is Jack Ma getting ready to come back if he's allowed to come back? And here we have the news on CNN Business, which covers more than Alibaba. Here it says China's internet giants snap up their own shares to boost flagging stock market value. Now, if you're a regular here and you haven't checked out the Art of Value Patreon for a while, I'll leave a link in the description to do that. Over there, there's a growing library of exclusive content, including weekly summary videos I'm doing now, which are more candid off-the-cuff comments than I do here, things I don't share anywhere else about the stocks I'm researching, also the stocks that I own, and my thoughts about the market for the week. So as I said, I'll put a link in the description and hopefully see you over there. They say Chinese internet giants are buying back their shares at a record pace as they try to boost their market value in the midst of a historic stock rout in the world's second largest economy. The biggest share repurchase by a Chinese tech company in the past year. It does reiterate that it's the second largest repurchase in its history, and explaining that a share buyback usually triggers an increase in price because there will be fewer shares available on the market. That remains to be seen. That hasn't actually happened yet, but over time, could it? If Alibaba keeps doing that with their over nearly $40 billion worth of shares over time, you'd think it would have to have an effect eventually, but we'll see. Alibaba stock has lost more than a quarter of its value in the past year. It's lost more than that over the past few years, more than a quarter. It's more like 75%. The tech giant's move comes at a time when Chinese regulators have been asking listed companies to repurchase shares to stabilize market confidence. So before they started doing that, or when they weren't buying back so much, there was a question mark, or at least I had a question mark, whether the government, the CCP, actually liked companies buying back their shares. I mean, before all of the stocks dropped, Alibaba kind of dropped before many others, and then they had the real estate market difficulties. And so now the government seems to be supporting these buybacks to bolster the the market value over time, rather than, saying they're a bad thing, because it does enrich shareholders, or theoretically it should do over time. And so that there was this inequality problem in China, and especially foreign investors that didn't want to seem to be enriching foreign investors and billionaires within China. But now the tables have turned and they're actually encouraging it. They have an overview here of Chinese stock markets have suffered a protracted slump since the peaks of 2021, with more than $4.5 trillion in market value having been wiped out from the Shanghai, Shenzhen, and Hong Kong bourses. So they really want to bolster. That's a lot of market value that's been wiped out. So no wonder the government wants to sort of steady up. It's about the stability of the economy of the country at this point. Before, it was just sort of individual stocks. The tech stocks really started it, and then real estate, market sort of collapsing. So really it's about the stability of the second largest economy in the world at this point. And, shoring up the prices of these tech companies, especially Alibaba, really seen as the pillar of the internet stocks, the internet companies in China. Now this article says, but whether the move will give a long-term boost to the share price depends on various factors, including broader market conditions, investor sentiment towards Chinese stocks, and Alibaba's ability to execute its growth strategies effectively. I think that's true about the growth strategies. Their two biggest sectors, China e-commerce and cloud, haven't been growing much at all. Some of those other sectors, as I've said in previous videos, like the logistics arm and international sales, have been doing very well. But the core of Alibaba really needs to get back to where it was in terms of growth, or at least show signs of more growth over time before I think the share price could go up. But these share repurchases, I think, will do a lot towards doing that. If they keep doing it over time, their plan, if they keep executing on their plan, buying back huge amounts of shares, really, it should theoretically have an effect on the share price. Now, what are your thoughts on these increased buybacks? Do you think they're doing the right thing? Do you think it will help to increase the share price over time, even though sentiment is still as low as it's been, really, and that has to do with the macro environment? But what do you think? Do you think this will work? This will finally have Alibaba bottoming out? Well, it has bottomed out. It hasn't been as low as it has been at the low, but will this work? Let me know what you think in the comments. Now here's where I say, if you're watching this on YouTube, I'm going to put a link here to the video that YouTube thinks that you in particular should watch next. So go and see that now if you want to. I'll put related links for others in the description as well. And thanks to everybody for watching or listening wherever you're doing that. And I'll see you in the next one.